Well, today we're going to talk about a company which has been in focus and who we've been wanting to talk to for a while now. The stock is down 24% in the last 5 days. And here's why it's interesting. It was supposed to be one of the very few players in the running for the PAN 2.0, but it's not won that mandate. A company that does your KYC is something that we're going to do on KYC today. So let me start off by explaining what a Protean eGov Technologies does. And before that, I want to try and quickly highlight what all I want to know from them. So the first one is, what's the impact of missing out on PAN 2.0? And this is not with regard to just the top line impact of 1440 crore estimated by some analysts. This is an impact of confidence. What does this do in terms of one of the very few players driving digital public infrastructure in the country and missing out on a mandate? What does that mean for it? And hence, you're not seeing a recovery on the stock. So that's what I want to ask management. That's the first thing. The second key piece is, what's the impact with regard to numbers? What's the impact on EBITDA? What's the impact on the business overall? And what's the impact on the existing business of not winning the PAN 2.0 mandate? So those are my questions. Then what's the reasonable growth expectation on the back of this? So we put this behind us now. What should one look for with regard to this company going forward? What's the reasonable expectation that one should keep? Now, the third one is, why have margins compressed sharply? And they have. We've seen the EBITDA number was well into the mid-teens to high teens just about 4 years ago. So why has there been this very sharp compression? What has changed in the industry dynamic? And fourth, what is the export stroke new business potential? And what's the competition, especially in the export market, looking like? You've seen competition even in the PAN 2.0. And now, when you go and you export some of your services with regard to digital public infrastructure, what could the downside risk to that be? Essentially, these are the questions I'd want to have answers to when I speak with management or when I analyze this company in better light. So hopefully, we'll be able to get those answers. Let me start off about the company. Now, in terms of Protean, it was incorporated in December of 1995. It's an IT-enabled solutions company. It creates digital public infrastructure. So this is, of course, largely relating to infrastructure on portals and platforms that you use when you interact with the government or you apply for certain either a pension or either your PAN card. So, and that's what they are involved in. They create that fundamental IT-enabled solution for digital public infrastructure. That's what the company essentially does. Now, it was previously known as NSDL E-Governance Infrastructure Limited. Thereafter, got listed separately and now is completely not associated or affiliated with that NSDL setup. In fact, they were substantial shareholders, no longer so. But what it actually does, and we'll try and break this down in better fashion, it's the largest issue of India's digital tax identity, which is the PAN. But even outside of that, it is also involved in the digital identity itself, not just digital tax identity. So PAN and TIN, which is the tax identification number, is what they issue. But outside of that as well, they do several things on the pension front, and I'll come to that. It also has developed innovative citizen-centric e-governance solutions and developed 21 nationally critical e-governance stacks. So more software, all of what you're looking at is more of software coupled with documentation and implementation on ground, the support that the government needs to implement some of the registrations that it allows. So all of those is what it encapsulates. Now let's look at the breakup of the revenue, and this will give us better perspective on exactly where the money is coming in from in terms of services. And we look at the FY24 numbers along with the FY25 numbers, once we have them on the screen. When you're looking at the FY25 numbers, around half of the top line has come from tax services alone. So 420 crore out of the 840 crore number has come from tax services revenue. 840 is the cumulative number, 420 is what they've done in tax services, and you'll see that it's come off. When you're looking at pension services as well, pension services is at 280 crore of the 840 crore number. So around 30% comes from pension services, around 50% from PAN services. Identity services is the new vertical which contributes around 100 crore, which is roughly 12.5%. And then you have new businesses which contributes around 35 crore. That's how it stacks up. So you have tax services and pension services which contributes a bulk of the top line, which provides the stability to the top line. And then you have all these other services which they are venturing into. But the main category is tax and pension. And let's talk about exactly that. So this is how the revenue share stacks up. This is FY25. Let's look at FY24, and the data is not very different. You're looking at around an 84% mix between tax services and pension services, even in FY24. Let's look at again. Let's try and understand. That's the manner in which pension services revenue has gone up. So you're seeing a decent clip of growth there, but you're not seeing a substantial growth, as you can see in the numbers, just about 10% or so, even from pension services. But let's talk about PAN first. It issues fresh PAN cards, reissues, updates PAN cards, runs tax information network facility centers. All of those is what it does in terms of offering services. In fact, for the PAN, it's the leading in terms of market share of around 64% of all PAN cards issued. It has issued over almost 53 crore PAN cards and is the first digitally verifiable ID which has been generated through PAN, has been generated through Protean. In terms of again, PAN cards issued per year in India, it's around 7 to 8 crore. So the opportunity going forward also is substantial. You're looking at tax services revenue. If you look at the way in which the journey has been, of course, we've seen a dip in FY25, but outside of that, it's been a reasonable 10% kind of increase. When you're looking at PAN issuances as well, annual PAN issuances, they've been in the range of 6 to 8 crore. In FY25, you saw a spike, but outside of that, it's been around the 6 to 8 crore number. When you're looking at pension-related services, it acts as the central record-keeping agency. It's established IT infrastructure, handles administration, does customer service functions, and as the subscriber base increases, the business grows for a Protean. So the subscriber base keeps going up. We've seen that go up with regard to pension. It was up 40% last year, and it continues to grow at a healthy clip. Let's talk about social security and welfare. Within this basket, it is within the NPS and the Atal Pension Yojana, which is APY. It has a 97% market share in this particular, or providing this particular service. And it's the sole provider for foundational identity services as well. The Aadhaar eKYC, the Aadhaar authorization, the e-sign, and the online PAN verification. From all of these four, it earns around 100 crore in top line. So those are your other services and your new age services which are contributing to top line, even though top line has contracted in this segment. So that is the other piece that you'll want to look out for as to how growth sustains there. Now let's talk about all the factors and metrics we look for. We hope we've tried to break this down the best we can. Software plus digital public infrastructure enabling services. That's what this actually does in terms of the company. Let's look at now all the metrics we'll track. Income statement, balance sheet, cash flow, return ratios. We'll also look at shareholding patterns, street cred, street coverage, and we look at valuations. So all of those 8 we'll try to cover. Let's quickly get to it. income statement. You look at the revenue CAGR, last 3 years, just 7%. EBIT has actually contracted when you're looking at it over the last 3 years. So you're seeing pressure with regard to EBIT and therefore pressure with regard to profit after tax. We will quiz management as to why this is coming down in terms of margins. But for the moment, the performance on a standalone basis, not looking good, and therefore we've given it a thumbs down. And this is a 3-year CAGR you're looking at. Even when you're looking at the last 1 year's performance, Q4 to Q4, because the numbers have come out, you're seeing some bit of margin dilution. You're seeing pressure on the top line as well, absolutely flat. Let's look at the balance sheet now. The balance sheet, though, in contrast, looks much better. You're seeing good positive net worth of nearly 1,000 crore. You're looking at a cash and bank balance of around 140 crore out of that 1,000 crore. So on a balance sheet of 1,000 crore, to have 140 to 150 crore of cash is quite good. And that's what they've done in the last 2 years. That's possibly a positive. There's no debt on the balance sheet, so no risk per se. So that too is a significant positive. Now let's look at cash flow. In terms of cash flow from operations, we've seen FY24 cash flows at around 100 crore, FY25 cash flows at around 200 crore. There's significant fluctuation in working capital. You want to understand whether working capital fluctuations are a concern or not. That's the other piece I have wanted to ask management. But otherwise, it's a fairly decent set in terms of cash flow. So we've kept it at a neutral. Let's look at return ratios now. You're seeing a steady decline with regard to return ratios. Mid-teens, 20%, again mid-teens. Now we are below the mid-teens. And FY25, you're seeing a further drag with regard to the numbers. And therefore, you might start to see a strong dilution with regard to return ratios. Identical on the ROC and the ROE front. Let's look at shareholding now. So we've given this a neutral. You want to see the ROE, ROC pick up. Is there potential for it? Looks likely because it was higher in earlier periods. Can it pick up is the question. We've given this a neutral for the moment. Let's look at shareholding now. Again, no significant promoter, no significant shareholder. You're seeing how the public, which is the retail investor interest in this stock has gone up sharply. You've seen the number of shareholders go up. All of this doesn't point well. You have a decent amount of holding. Your FI is holding around 10% Your DI is holding around 27%, but look at the fall with regard to the DI holding, public holding going up. Again, a possible concern. Now, let's talk about, therefore, a thumbs down on the shareholding pattern. Let's talk about street cred. It's not done too well either. I did say that the last 5 days, the stock is down 25%. Last 6 months, the stock is down 50%. So there's pressure across the board when you're looking at the stock price. Not looking good from a stock price or a shareholder perspective either. So there will be pressure on shareholders. The stock is down around 12 to 13% over the last 12 months. And therefore, we've given this a thumbs down as well. Let's look at valuations now. Mind you, let's first understand what this company does, because there are not too many companies within this space. But when you're looking at what this company does at its core, it's software and services to the government. Both of those ideally should either be in the IT bucket or it should be in the services and logistics bucket. Ideally, your price to earnings multiples should be compared to similar companies in similar sectors. So keep your eye out on that. The other piece is that the guidance says that they will do 10 to 12% growth, right? On a 10 to 12% growth guidance, on a 10 odd percent EBITDA margin, on a 5 odd percent EBIT margin, would you pay a 32 times is really the question. And it's a 1 year forward price to earnings multiple. The FY27 price to earnings multiple as well is around the 27, 28 times number. Some bit to go in terms of execution. They are expecting, analysts are penciling in a very strong FY26 in terms of both top line growth as well as bottom line growth. That's why you're seeing that sharp contraction in multiples. One more thing I want to highlight. Protean has never been valued at a 32 times price to earnings. So if this were to happen, you might well see it at its lowest price to earnings ever. But circumstances and situations are also different versus the past. And therefore, we are giving this a neutral, keeping all of these factors in mind. It's a mixed bag. Last off, I want to take street coverage. Now, in terms of street coverage, very low street coverage, 4 buys, 1 hold, 1 sell, 21% upside. We've given this a thumbs up, just 6 analysts covering the counter. You'd want to be cautious, but at the same time, a 21% upside with 6 analysts not looking as bad with 1 sell call as well. Let's quickly stack up the KYC ratings on this one. And when we are stacking it up, we're seeing thumbs down with regard to the income statement, but balance sheet thumbs up, neutral on cash flow and return ratios. Shareholding pattern thumbs down, street cred thumbs down, valuation neutral, street coverage thumbs up. It gets a poor 3.5 on 8. But mind you, you'll want to look at each of the metrics individually and want to make an assessment as to what is happening. Let's shift focus to the management though. I spoke earlier to Suresh Sethi, who's the MD and CEO of Protean eGov Technologies. Here's what he had to say about the main piece of it, PAN 2.0, missing out on it. What does it mean? Listen in.
First of all, let me clarify the ambiguity which is out there. Protean 2.0 today is basically, it was an RFP, as we all know. It was an RFP to design, develop, integrate, and maintain the complete IT stack, which is today the IT system, the core IT system, which is today run by the IT department. And this is not something we run today. So if you look at the entire process of PAN application and issuance, we have today got a mandate which we received in 2003, where we basically collect the applicant data, which is for application for a PAN card, or we collect the data with regard to updation of a PAN card. This data is collected at both online and offline channels. When I say offline, we have a regulated network of almost 400,000 agents where you can get an assisted service. This data, once it's collected, we securely transmit it to ITD. ITD does the work of the allocation, which happens of the PAN card PAN number, and that is what happens on the IT systems. Once the PAN number is allotted, we then issue the PAN card and send it to the citizen. So we are seeing these are two different parts of the process. So the IT systems which are getting revamped is something we don't even run today. And that is where we want to make this difference between what PAN 2.0 really stands for. The second point being that PAN 2.0, as it is getting deployed, is also indicated in the tender document that it will be an 18-month timeline for deploying the revamped stack. So we clearly don't see an impact on a separate mandate we have from the ITD, which we received in 2003, to run the processing and issuance of the PAN cards. So that is completely separate from the scope of the PAN 2.0 RFP.
Point taken. So was the PAN 2.0 RFP going to add incrementally to your top line in any fashion? Because that's what it seems like many analysts have built into their numbers.
No, so as you know, Hersh, any RFP document till you receive the mandate is always a 0-1 situation.
Absolutely.
We definitely, considering our long relations with the IT department, our ability, what we have done for the entire tax modernization as a company, we have the necessary capability and the competence to do this, and we've demonstrated that even recently in a couple of other mandates where we are, for example, working on the CERSAI KYC 2.0 stack. So that capability exists. We definitely were looking at this as another business opportunity where we can contribute to the tax-related digital public infrastructure of the country. And this RFP would naturally have been, this win would have been another incremental source of revenue. But the existing business stands strong as is. And as you know, we have diversified into multiple areas, which are core businesses, whether it's in the terms of identity, it's in terms of pension business, and the new business lines where we are looking at building on top of the identity stack with products, We are looking at other work in open digital ecosystems in the space of agri and others. So it's just an additional business.
I fully agree, and I hate to interrupt. I will come to the other lines of business because
Sure.
that's how we've kind of framed this up. I want to first focus on, and with regard to therefore your current top line. What you are saying is that your current top line of around 840 crore FY25, that the growth there will continue. That will not get impacted by losing out on this RFP for PAN 2.0.
Yes, the answer is yes.
Got it. And how much incremental top line would a PAN 2.0 type RFP add? Around 1400 odd crore is the number which is being floated. Is that your thought as well? And what's the margin miss on that count? What's the kind of margin number that one would make on that kind of a top line for such kind of an RFP?
So see, most of these RFPs are generally multi-year RFPs. So there is a part where you build and develop the tech, and you get around, depending on each RFP, you get around 40 to 50% of the whatever is the tender amount that gets paid out, and then it runs like an AMC over a number of years. And some of the RFPs go as long as 7 years, which is the case over here. So then you get AMC-based revenues coming every year onwards. So that is the sort of numbers which we are looking at around this RFP. And clearly, the other part is that the RFP margins, naturally, every organization would bid and keep a margin over there. I would not like to share that margin data on the call,
Sure.
Because naturally it is competitive to each company. But clearly there's a margin which is built when you are bidding for these projects to keep them sustainable and be able to deliver against them.
Point taken. Point taken. So probably 50% upfront, and then 50% would be spread over maybe 2-3 years. Is that the right way to look at this?
5 years, around 5 years.
Around 5 years. Okay. Point taken. And the 1400 odd crore RFP would be the cumulative amount over 5 years which would accrue to you. That's how one should look at it, I guess.
That's the way most of the RFPs are structured, absolutely.
Point taken, sir. Okay. So, point taken. Now, I want to talk about existing as well as new businesses which you ventured into and the potential of that. So, other than this piece, your PAN services to the government continue unabated. So, that top line will continue to grow based on the number of applications you receive. Please correct me if I'm wrong. So, that continues unabated. That is not disrupted at all, regardless of PAN 2.0 implementation or otherwise.
Yes, Hersh, in that case, as we've earlier stated, since we are now talking about the businesses, BAU businesses for us,
Yes.
PAN, we've always indicated, it's not a saturation ID. Aadhaar we naturally apply for when the child is born. A PAN is generally applied when you are entering the workforce, or you're opening a bank account, or you are availing a government scheme. So the current penetration of PAN in the country is around 35 to 40%. So there is a huge headroom, new workforce entry every year, and so on and so forth. So if we look at the trends over the last few years, 6 to 7 crore PAN cards are issued annually. We are also happy to report, as part of these results also we've stated, over the last year we've gained significant market share. We've improved our market share by almost 5% over the course of last year. And we see this as a business which is given to us as part of our 2003 mandate. And we definitely see headroom in this business growing as we move forward.
Point taken. So, sir, what's the reasonable growth clip across business lines? If you can tell us, what is it that one can expect? Would a 10% growth be okay? Because what we're looking at over the last 2 years is some bit of sluggishness in the business. So just trying to understand where that's going.
So, Hersh, we have 3 core businesses which I may put as, which have been having I would say, which are at least the most recent being the identity services we provide, which again we've been running for the last 7-8 years. Now, each of these businesses, let me go quickly. I spoke about PAN. In the pension space, we have the mandate as a central record keeping agency, a business where we support the Atal Pension Yojana and the NPS. And recently, we've also deployed the entire tech stack for UPS as the primary CRA, which was done in record time. So in the pension business, we have almost 97% market share in a three-player market. And that again is a growing business. Last year we posted, or this year, the growth has been year on year has been around 12%. ID again is very closely linked to the digital India, growth or momentum. And there we provide services like e-sign, e-KYC, e-authentication as a service agency to UIDAI, and we also provide online PAN validation. So that's the entire identity stack, which has been showing healthy growth. In terms of numbers, at times we've seen, CAGR, which is more than, 30-40% in terms of growth. But yes, then there are the revenue numbers which we have seen also steadily growing around 10 to 12%. So the core businesses we see growing over 10 to 12%. Our bets in the new business lines, we've clearly called out that we are extending the identity services in a data stack manner, where we are looking at products like eSign Pro and Rise with Protean, which is a API marketplace. These businesses we launched, or products we launched in the second or third quarter last year. So this is a year where we expect the momentum to pick up. Likewise, we've got now play in multiple open digital ecosystems. Our core earlier was pension and tax. Today we are operating in the space of agriculture, health, digital commerce through ONDC, mobility. So there are multiple open digital ecosystems in which the company is contributing. We've received the extended mandate of supporting the central agri stack. Similarly, we won other RFPs, as I mentioned to you, which are critical because they are in the form of, core DPIs again. We won the CERSAI CKYC 2.0 RFP, which is again the national identity stack of central KYC. We won the BARDS registry, and these are the other lines of business, both RFP and non-RFP, which we definitely expect to contribute to the bottom line, and therefore expect a healthy growth coming over the next few years.
All right, that's all the time we have on this edition of KYC. Thanks for watching. With that, stay tuned to NDTV Profit. More action on the other side.